Good morning, good morning, good morning, everybody. Welcome to a new week. Happy February 26th, 2024. Welcome to the Deluxe Premarket Prep Edition. That's our Monday edition where we go over the groundwork for the week, setting the expectations for major economic data that drops, right? Like inflation news or Jerome Powell speaking, stuff that can really throw a wrench into your trading week. We go over that preemptively so we don't sit there and try and do a diagnosis. Instead, we come up with a game plan, right? So that way we can avoid the bombs in the road, and we don't have to worry about afterward looking at a blown up account saying, oh man, this is what tripped me up, right? We identify those trips, execute effectively in markets. So we're going over the week ahead, going over important earnings, important data drops, and then also going over our Monday specific news to make sure that we are best prepared to prosper, right? In order to execute, in order to remain patient and to be on the right terms with markets. So I'm excited to start another great week. Hopefully I'm not lagging. Let me know if I'm got Thinkorswim loading up in the background, and you guys know how that is on the machine. But I hope everybody had a great weekend. Latrice, good morning. Coco, good morning. Glad to see you queens here, and I'm excited to get into what we have going on this week. We still got earnings happening, but nothing as big as Nvidia, right, from last week. I'm also fine with like not having to hear that name for a while, considering the fact that it's been like all them. So we can move on, right? Maybe give some other things some shine. I've got like I don't know, like a 50,000 count threshold for hearing the same thing over and over again, right? First it was Taylor Swift with the Super Bowl, and then now I feel like it's just everywhere I look, right? Hearing Nvidia. So I'm happy to kind of get into another week that isn't related to them, right? And get back to really kind of gauging exactly what's happening with markets and then making sure that we are leveraging that information for our own gain. Um, a lot of people have struggled in the past few weeks, and a lot of people are saying, okay, why is this the case? It's because when you're up at all-time highs, you don't have price action to anchor your like theses to when it comes to technical analysis, right? When you go through and you break down charts, the reason why it's a lot easier is because you have past price action that can help basically allow you to gauge where we're headed. But it's like without that, with us being at new all-time highs, we don't have a lot of past price action to help us gauge, okay, what are major levels? We broke all-time highs. That was the major level, right? So price can behave very weirdly up here in this area. And that's something that I'll start it, right? Because you get a lot of golden nuggets tuning into these sessions for free, I might add. But making sure that you understand that idea that markets typically move weirdly up around all-time highs is really important, because you have a lot of wealthy people, right, that are taking profit, a lot of money that is being moved. Institutional money is trying to get a gauge on where we go from here because it is completely uncharted territory, right? It's like working to break out of Earth's atmosphere, and you spend your whole life working to do that. Then you break beyond that boundary, right, which is all-time highs. And you're like, wow, there's nothing but space up here, right? I don't really know what to do. It's the same thing with markets where it's like you break those all-time highs. You have to wait for more price action to happen to form a structure that lets you know that the buyers and the sellers are more likely winning in this battle. And then you can make your, deduction after that. But you need time to pass and more price action to accrue, right? You need more candlesticks there up above all-time highs to let you know, oh, okay, based off the fact of how we moved at all-time highs, I think we're going to head lower from here, right? And then put in a new high, or I think we're going to continue higher and keep this momentum up. And that's why I'm going to position for XYZ, right? So understanding how the market moves and also how you should behave at certain junctures is important. And this might be something that, people forgot. It's something I've mentioned before, but it's good to keep in mind, right? When you're just like, why does everything seem like weird and uncertain? It's because it is, right? You break that 5,000 level and everybody's up here like, what are we doing? Are we selling? I heard this CEO is selling and this CEO is selling. Are they doing it for tax purposes, or are they taking profit, or is something happening that I don't know, right? All of that exists right now in the market because it's a culmination of the sentiment of the American people, right? And investors as a whole when it comes to these companies. So there are times where there is uncertainty, right? there are times when you're not moving as much as you were in the past, and being able to identify those times is key to longevity in these market streets. But we're going to kick things off by talking about the week ahead, and then we're going to get into our Monday specific news. As always, we're trying to get 1% better, just one, by the end of each one of these sessions, by the end of each day, right? So make sure you drop your one in the chat, signifying your intention to do that. When you intend to do something, then you can go about doing it again, and you can replicate it. Doing something good once doesn't help you, right? But doing it over and over again, consistency, life changing. So in terms of our top news this week, the economic calendar for the week ahead includes fresh data on new home sales, durable orders, and construction prices. Analysts think bond yields could push higher if inflation expectations return, following the higher than expected CPI and PPI reports for January. The marquee event for inflation watchers could be the release of the core PCE core number on February 29th. The release is considered the Federal Reserve's favored inflation gauge and could move the meter with interest rate expectations. In the tech sector, analysts expect another dramatic week for semiconductor stocks as NVIDIA's earnings report sent the Santa Clara-based company shares up more than 20% and led to strong rallies for AMD, SMCI, ARM, Marvell Technology, and Micron, just to name a few. The earnings calendar includes key releases from Li Auto, or LI Auto, Lowe's, eBay, and Anheuser-Busch InBev, whose ticker is BUD. So in terms of earnings this week, definitely a lot lighter of a slate, but still a few interesting names, particularly on Wednesday. So Monday, today, we've got Workday, WDAY, who's reporting, Li Auto, ticker LI, Domino's Pizza, and then Zoom Video. So all of them report now or today at some point, either before or after the bell. Tuesday, February 22nd. And again, when you hear these companies that are reporting earnings, maybe you then go and check out these companies, right, after they report and see if they have a positive setup, right, or a probable setup for post-earnings plays, right? When you get that education, you learn to fish. You can do so for a lifetime. You don't by any means have to wait on me. And that's exactly what I want from each and every person here is you're not waiting on me, but you're taking this knowledge that you've learned and you're saying, okay, cool. Based off of what we did last week when we hit a home run with NVIDIA post earnings, right? It made more profit than some people did swinging through earnings, despite the bigger move because of the IV crush, right? When you do something like that, you can then look and say, okay, there are still other companies that report. Snowflake reports on Wednesday, huge company, right? These companies where if you get a gap up or a gap down and you follow our strategy, you can have plays to eat off of throughout the week, right? So using what you learn and applying it in your own way is the biggest benefit of learning and growing. And that's how innovation for us as a species has gone for the last, X number of hundreds of years, thousands of years. In terms of earnings spotlight on Tuesday, we've got Lowe's reporting, ticker LOW, American Tower, AutoZone, and eBay. Wednesday, we have bigger names, Salesforce, one of them, ticker CRM, Royal Bank of Canada, Baidu, ticker BIDU, HPQ, and then Snowflake. So Salesforce and Snowflake are two of the more, kind of, I guess, important names that would report on Wednesday. And those are ones that could get big moves, right? So those are ones that could be targets. In terms of Thursday, February 29th, we've got Anheuser-Busch InBev. Their ticker is BUD, BUD. Toronto Dominion Bank, TD, Dell Technologies, and Autodesk. And then Friday, Plug Power and Fubo TV, whose ticker is Fubo. So not a power-packed earnings slate, but still some everyday, names that we're very familiar with that could move, So make sure to check those out. And it tells you in Thinkorswim as well. If you pop out to the daily, like, okay, this company's earnings is here. If you hover over the icon, the little red telephone in that blue light bulb, it'll tell you, when the earnings conference call is, when the guidance call is, et cetera, et cetera. Let me see what else we got going on here. IPO watch, not really of much interest to me. Volatility watch. Kroger and Albertsons also could be active with the FTC in several states threatening to sue over the planned merger. Okay. So that might be something that causes volatility in the grocery space. Event schedule. Notable events to watch also include Apple's annual shareholder meeting. Yeah, not looking like anything too important. So we're going to go dive into our Monday specific news, We also want to check the U.S. economic calendar, though. We go to marketwatch.com in order to do that. Very important to do that so that you know what economic data is dropping throughout the week. Inflation data, all that stuff. When you wake up and you go, oh my gosh, the market is up 3% or down 3%, what happened? It's probably something that was listed on the calendar already and is not really sneaking up on you. You just weren't aware of it. So we want to make sure that we're aware of that so that we don't get snuck up on. All right, so Monday, February 26th, new home sales at 10 a.m. So that could be one of those things where, market opens and 30 minutes afterward, we get some type of like 1 minute volatility action based off of new home sales. So just keep your eye out for that. But shouldn't be anything crazy. Tuesday, durable goods orders, S&P Case-Shiller Home Index at 9, consumer confidence at 10. So consumer confidence at 10 a.m. tomorrow, that will be one of those things that during market hours will likely make a difference, right? Much more so than the new home sales today. So consumer confidence tomorrow at 10 a.m., make sure that you have that written in the calendar. Tell your voice assistant, right, to give you a reminder at 9:50 that there is data dropping at 10 a.m. And then that way you're not, kind of snuck up on here when it comes to that consumer confidence data, because that will be important tomorrow, and that is 30 minutes after the market opens. So you get the market kind of like chopping and not doing anything, or maybe it fires some type of pattern, but it waits for that data in order to like unleash its true move, which we've talked about as well, can happen. So be on the lookout for that tomorrow. You could have the market, running its way up to a resistance level, and then we're hanging out, and then the data comes out and we like peak above for 1 minute, and then we just shoot back below and drop it like it's hot. Wednesday, February 28th, we get GDP data. So we do have a much more packed week this week, not over the top, but Tuesday, consumer confidence, Wednesday, GDP, its first revision, but still, revised GDP data, and some other retail inventory stuff before the market opens. Thursday, we get jobless claims, and then we get personal income, personal spending, and PCE index and core PCE. So we get inflation data on Thursday. That is the Fed's preferred measure of inflation. CPI tends to move the markets more. Don't know why. You'd think it's the one that the Fed cares about the most that would move markets more, but it's not. So we get PCE data. That can impact how we move. So as of right now, we've got Tuesday, consumer confidence at 10, GDP revision on Wednesday, Thursday, jobless claims and PCE inflation data. And then we've got pending home sales as well. And then Friday, we get manufacturing PMI at 9:45, and then ISM manufacturing at 10. So those are one of those things where 15 minutes after open, 30 minutes after open, we can get some volatility because of that. So we do have a more packed schedule when it comes to data this week than some people might imagine, right? That's another big golden nugget you get from just being here. Because you don't go in and you say, oh, wow, like I've got this awesome, trade opportunity. And then we get bad GDP data, or we get, bad PCE data, and you're not aware of it. And where you could have swung one contract, you've swung 5, right? And now you've got much more risk on the table and you're down in the dumps. Whereas, with one contract, maybe you're like, oh, I'm down significantly on this contract percentage wise, but I only lost $50. Whereas if you have 5 of them and you're down $250, that's not fun. Right? That's not fun at all. So being here to plan already gives you a leg up on 90% of the rest of the people that just wake up and just look at the market and just start throwing stuff around, right? Because they don't know what's going on or what's happening or what's coming. So speaking of what's coming here, we're coming up to our Monday specific news. So going over specifically that Feb 26 news, our top news is flush with cash. It seems like a lot of big wigs, we were just talking about this, are cashing in on the market while the going is good. The selling is also taking place across different industries, with Jeff Bezos dumping $9 billion worth of Amazon shares this past week, while JP Morgan, ticker JPM CEO Jamie Dimon, unloaded $150 million of the bank's stock in his first ever sale. So his first sale of JPM ever was last week. Meta's Mark Zuckerberg additionally took profits by dropping $650 million in shares of the social media giant in recent weeks, as well as a number of big sales by other executives and directors like the Walton family of Walmart. So we've got across sectors a number of different big CEOs that are taking profit. A lot of people say, oh, does this mean I should sell? No, not necessarily, right? But it's just something to take note of. So snapshot, these bulletins may get some investors nervous, even if the sales were telegraphed in advance, with smart money departing some of those most valuable companies in the world. Over the weekend, the latest glimpse of Warren Buffett further showed that Berkshire Hathaway's cash pile continued to grow, hitting a record of 167 billion dollars at the end of 2023. Wow, and up nearly 40 billion dollars over the course of the year. As the market continues to hit all-time highs, are these high-profile players getting liquid and out when they can, or is there a bigger picture at play? And that's really always what's tough when it comes to markets, right? You never have the full picture when it comes to you trying to monitor wealthy people's moves. You never know what the totality of their trade looks like, of their portfolio looks like, of their situation looks like. They could be selling for tax harvesting purposes. They could be selling in order to fund a new venture or an acquisition. They could be selling for a number of different things, right? You've got all these different billionaires that are buying private islands and building bunkers and buying farmland, which again, disturbing signs. But there's a lot of different reasons behind why wealthy people do what they do. So I wouldn't look at this and say, man, this is the time that I need to sell my Meta, my JPM, my Amazon, because you don't know the full story of what's happening, right? Before Apple reached all-time highs, like 2 times ago, there were a ton of people selling, and people were like, this is the time, right? Apple's got to drop, and it wasn't, right? We continued to go up. It was just they were doing that for their own reasons. So yeah, I wouldn't necessarily influence that or let that influence you in terms of your positions, because you might be dumping for literally no reason, and you're like, okay, cool, I got to lock down my $5 of profit, following Jamie Dimon, who also sold his JPM. Sure, he's not locking down $5 in profit. We don't know how long ago they entered those positions and how much they are up. They could be taking profit for the first time since COVID, right? Which is important to think about. Let's see here. While the personal moves make splashy headlines, it's important to recognize that many CEOs or founders wait until stocks hit records to cash in or diversify their wealth, which is the case in all the firmly established companies mentioned above. It doesn't mean that the market is going to tank or enter a correction anytime soon, but rather a recognition that these players have been waiting several rocky years in the aftermath of the pandemic to take money off the table. As for Buffett, he's been sitting on a cash hoard for a long time. That is true. And Buffett does not invest in a whole lot of things, because he doesn't invest in things that he can't understand fully, and also things that he doesn't see like immediate, tangible, real world value. Again, you and I were probably invested in Apple before Warren Buffett was, just to make that clear. Like, as a fact, he just entered Apple like 5 years ago, whereas most of us have probably held Apple, for a number of years, maybe at least a decade. But yeah, it's not surprising that he's sitting on a cash hoard. As for Buffett, he's been sitting on a cash hoard for a long time, and he's known to only put his money to work if an opportunity is undervalued, the price is right, and he fully understands the investment. Yeah, he's a full-blown value investor, which means that you won't see him buying any NVIDIA, right, at any point, because it's overpriced and will continue to be overpriced, and he doesn't believe in investing that way, right? He's a value investor. He says, okay, this thing is valuable. Right now, I'm going to try and figure out a cost of it, which is also tougher in the new world, right? You have a lot of things where you cannot calculate how much a company is effectively worth, like really worth. With Coca-Cola, you could do that, right? You could say, okay, you sell this many products, right? This is how much you are worth. With NVIDIA, it's like, yeah, you sell this much, but the price is constantly changing based off the fact that, what those inputs go into is becoming more and more valuable. And there's not yet a good gauge on how valuable those things would be. Those things being AI products. So it's like he'd never be invested in an NVIDIA. But that's also why I say, like, the world is changing. So for all the people that are like, oh, Warren Buffett does this and Warren Buffett does that, Warren Buffett would not be the wealthiest investor nowadays, if he didn't get the start when he did and then did his strategy how he did his strategy. It's just a different world. It's a straight up different world. And I think he realizes that. I don't think he cares. He's like, what, 130? So he's like, what I did worked. I'm sitting on hundreds of billions. I don't need to change that now. For what, right? Why would I do that? And he's just riding off into the sunset. So in terms of the Oracle of Omaha, which is his nickname, quote, there remain only a handful of companies in this country capable of truly moving the needle at Berkshire, and they have been endlessly picked over by us and by others. So he's kind of saying he doesn't really see a whole lot in here that's worth investing in. Buffett detailed in his annual letter, some we can value, some we can't. And if we can, then they have to be attractively priced. Outside the U.S., there are essentially no candidates that are meaningful options for capital deployment at Berkshire. All in all, we have no possibility of eye-popping performance. That's how you know you're old. Throw a 5 in the chat if you've ever dealt with like an elder who's like on their way out, right? And they just don't care. That's him now. He's like, all in all, we don't have a possibility of eye-popping performance. So if you want eye-popping performance, don't come here. Right? That's like your grandpa telling you straight up, like, Grandpa, let's do something fun. I don't do fun things. I'm 100. I do what relaxes me, right? That's what he's saying. He's like, you're not going to get eye-popping performance here, and I don't care, right? So go kick rocks and flip-flops somewhere else. If you want to mess around with meme stocks, go do that somewhere else. If you want to chase the AI craze, do that somewhere else. We're not doing that here, which is just so classic, like old guy type of vibes, right? Just like, get off my lawn. Get off my lawn and let me live in peace. Let's see what else we have going on here. In terms of tech news, search battle. So here's some big news. Microsoft offered to sell Bing to Apple in 2018. I wouldn't have bought it either. Bing sucked until like last year when they integrated with ChatGPT. So they offered to sell Bing to Apple in 2018 or form a joint venture related to search engine, according to a recently unsealed post-trial brief from the DOJ's antitrust case against Google. The case relates to Google's alleged search monopoly and the methods that it used to ensure dominance, such as spending billions of dollars to make its search engine the default on mobile phones. Google argued it had competed fairly, outlining that Apple declined to make Bing its default option, despite Microsoft approaching the iPhone maker multiple times. Yeah, that's like funny and anecdotal evidence, but means that it's probably a slow news day today, given that this was the second story on the slate. Consumer news, $5 credit. AT&T is reimbursing wireless customers, both consumers and small businesses that were most impacted by last week's network outage. The $5 credit, or the quote average cost of a full day of service, will appear within 2 bill cycles and quote is fully managed while achieving the 2024 business objectives we have set for ourselves, according to AT&T CEO John Stankey. However, many unhappy customers took to social media to say that reimbursement was not enough. AT&T has blamed the outage that hit thousands of customers and prompted federal scrutiny on an update glitch, not a cyber attack, which we just talked about last week. No one would actually say that a cyber attack took place because that means that people cannot trust them. They would take a bigger hit if they said, hey, we got hacked, and Verizon said, yeah, we didn't, come to us, because people would leave AT&T because they lost trust, and they go to Verizon, right? So I don't think any company would ever outright, unless it just really hit the fan, stuff really hit the fan, there is no way that a company is going to come and say we got hacked anyways, right? Of course, it's an update glitch. We're constantly updating new features and optimizing our work processes and workflows in order to increase the value delivered to customers. No, bro, right? Somebody hacked in and said, give me 100 million and I'll give your company back to you. But yeah, I just think this is funny. Like the average cost of a full day of service. What about the opportunity cost of me not being able to make calls? You guys all know my brother's a realtor. He does great work. He, does great services to his clients. If you're looking to buy, sell, or rent, right, you hit him up. Jonathan Holland, amazing experience, shameless plug. But realtors have to have their phones available, right? Someone calls, they want to make an offer, all this stuff. My thing is the opportunity cost of my phone being down for a day, right? So $5 credit, I get it. They send that out to millions of people. It costs a lot of money, but also like kind of a slap in the face. Like, hey, here's $5, dude. Like that cost me maybe closing on a deal that would have made me $15,000, right? And you're like, oh, here's $5. Sorry about that. It's like, nice, thanks. You might as well not do anything at all. In terms of, because like $5, you can't even get a meal at McDonald's for $5. Like, what are you really giving me? In terms of today's markets, mostly red, even though it's kind of like, we're really flat here. But today's markets in Asia, Japan up 0.4%, Hong Kong down 0.5%, China down 0.9%, India down 0.5%. London in Europe down 0.3%, Paris down 0.3%, Frankfurt up 0.1%, the Dow down 0.1%, S&P down 0.1%, Nasdaq flat. So basically everything flat. Crude down 0.4% to $76.18, gold down 0.4%, Bitcoin down 1.1% to 51K. Today's economic calendar, those new home sales at 10 a.m., really the only thing we've got going on. And then what else is happening? We'll finish up with our stock news rundown, rapid fire here. Disney, ticker DIZ, Reliance signed impact to merge Indian media operations. Alcoa to buy Australia's Illumina in $2.2 billion deal. ECB has one message for crypto traders. Bitcoin is bad. That's the European Central Bank, by the way. Ford, ticker F, halts shipments of electric F-150 truck due to quality issue. EV winter, don't tell Toyota. Ferrari sitting at multi-year highs. Their ticker is RACE. Haley stays in race despite Trump's South Carolina primary win. I mean, it ain't my money she's throwing down the toilet, so do whatever you want. Broadcom, ticker AVGO, nears sale of unit to KKR for about $4 billion. Record U.S. solar and wind investment, not enough to meet climate goals. And the next Apple iPhone might be an AI device. What could that look like? Then radio pharmaceutical market expected to reach around $14 billion by 2032. So, yeah, slow news day looking like, but important game planning that we did for the rest of the week when it comes to just setting ourselves up for success. So I'm glad that we got the time to do this, the ability to do this. And I wouldn't rather do it with anybody else than the people that are right here, right now. So congratulations on investing in yourself, being here, remaining committed, right? Commitment is what makes the dream work. Consistency is what moves mountains. So being here each day, chipping away at it, right, is what makes the difference for all of us. So I hope everybody has a great day, right? I'm not even hoping, I'm speaking it into existence. I'm declaring that you have a great day, that you are blessed, that you operate in excellence and patience, and that you have a day that you can replicate and move forward so you can have a life worth living, right? So again, by the way, I'll be here. I'm going to do my Loom analysis, then going to birthday brunch, right? It's Bailey's birthday, so going to celebrate her, and then I'll be back like afternoon, I guess, for the rest of the day, but open probably won't be here. So I'm going to go dive in and think or swim now. I'll drop that analysis off. Let's make it a great day, people. Peace.